The East Baton Rouge Parish Library believes that a thriving business community is good for us all. That's why we help entrepreneurs start businesses with tools like Gale Business Builder. Keep commerce rolling by providing access to computers, printers, and free Wi-Fi at 14 branch locations. Get a library card. Grow your business at ebrpl.com/business.
Owning a business comes with pressure. There's a limit to what I can do and still keep employees engaged. Fortunately, there's Insperity. They expand my HR capabilities exponentially, helping me with hiring and training while offering my employees competitive benefit options. Since I can focus on other priorities, my staff can thrive and my business can grow. With Insperity, nothing seems impossible.
At Neighbors Federal Credit Union, we believe stronger schools build stronger communities. And with the generosity of our members and staff, we're making a difference. We've awarded 54 project grants, totaling over $220,000 for on-campus improvements. We've provided 99 scholarships worth nearly $300,000 to help dreams take flight. And through our mascot checking program, we've donated an additional $560,000 in unencumbered funds to local schools. Neighbors Federal Credit Union. We are neighbors helping neighbors.
Good morning and welcome to Strictly Business. I'm your host, Penny Font. This webcast features conversations with Louisiana's most influential CEOs, entrepreneurs, and community leaders with the goal of providing insights, ideas, and inspiration to help you and your business grow. We want to keep Strictly Business as interactive as possible, so for those joining us live, here's an icebreaker question for you. Submit your vote in the comments, and the results will be posted at the end of the webcast. Strictly Business is brought to you by Neighbors Federal Credit Union, the East Baton Rouge Parish Library, and Insperity. Without their support, this project would not be possible. This month, we welcome Jude Melville, Chairman of Business First Bank Shares, Inc., and President and CEO of b1BANK. Since listing on the NASDAQ under Jude's leadership, b1BANK has grown to $6.3 billion in assets by expanding its footprint across Louisiana and Texas, including the completion of multiple whole bank acquisitions. Under his leadership, the b1 Foundation launched in 2021, helping small businesses gain access to over $18.5 million in capital. Prior to becoming a community banker, Jude served as a captain in the United States Air Force. He holds degrees from Harvard College, the London School of Economics, and the LSU Graduate School of Banking. Jude, welcome, and thank you for taking the time to join us this morning.
Hey, good morning, Penny. Thanks for having me.
Let's start with this. b1BANK has been on an acquisition path for several years now. So I'd like to start our conversation by exploring your strategy for strategic expansion.
Sure. Yeah, we've been blessed, I would say, beyond our own expectations, really, with growth, and not just through acquisitions, but also through organic growth, hiring and growing our own. And we're almost about $8 billion in assets, and all over Louisiana now, and Dallas and Houston as well, and about 800 employees, just as importantly. And it's been an exciting time. And I do think it might surprise people to know, though, that our drive to be bigger really hadn't been about being bigger. It's really been about being better. And one of the ways that you're better as a bank is being safer. And one of the ways that you're safer is to be sure that you're diversifying your risk. And so our drive to be bigger and our drive to be in new markets has really been about making sure that we're doing the right things to diversify our risk. You can have 1,000 clients, but if you're not here 5, 10, 15 years from now to be able to serve those clients, then you're not any better off than not actually existing. So I'd rather I think if we have 100,000 clients, we're going to be able to serve those 1,000 clients better over time. And so it's really been about being better as opposed to being bigger. Bigger kind of comes naturally when you're better, I guess.
Absolutely makes sense. What factors influenced b1BANK's decision to expand into Texas markets?
Well, business really isn't that complicated, and the decision to go into Texas was really something of a no-brainer. They've been doing a lot of things right over a long period of time, and that means that they're experiencing growth and will continue to do so. So any growing business wants to be a part of growth. So I think going there was really not a hard decision at all. The bigger questions that we had to ask ourselves were more about, less about where we went, and more about how we went. Were we ready to go, and were we ready to execute? And so as I thought about when the right time for us to go into Texas was, it really was about, first of all, kind of a internal gut check. Are we equipped to go into Texas from a position of strength? And when we decided to go into Texas, we just done a couple of acquisitions and had been growing organically. We actually were around for 13, 14 years before we decided to go into Texas, and we were about $2 billion in assets. So I felt like it wasn't a bet the farm kind of decision. It was more of an experiment, and we'd see if it worked. So I felt good about where we were as a company, and if you're going to be buying, you're really selling. And I felt like we had something to offer, something to sell, and so the time was right from that perspective. The other thing is that it's really not just where do you go or how do you go, but it's who do you go with. And so I needed to make sure that we had the right people on the ground. So even after we decided that we'd go into Texas, it took another year before we finally found the right person to be our first hire there. And clearly it's been paying off, and we're about 45% of our assets are now in Texas between Dallas and Houston. And so good diversification and strategy that seems to have paid off. I would like to say I'm proud of the fact that even while we've invested in Texas, we haven't divested from Louisiana. It's important to me and to us that we continue to invest here. And even as we've grown exponentially in Texas over that same time period, we've also tripled in size here at home. And so the thesis has always been that we needed to be strong in Louisiana to be valid and credible in Texas, and being stronger in Texas actually makes us stronger in Louisiana. I'm just as proud of that balance as I am our particular growth in a particular market.
Absolutely. Let's drill down just a little bit more on how you approach evaluating new markets for strategic growth. How do you assess community needs in new markets as part of your expansion plans?
Sure. Well, I have the benefit of being in community banking, and one of the nice things about being a community banker is that that every community needs a community bank, and most communities need multiple community banks. So I've never been as I'm certainly interested in the particular markets, and when we decide to go somewhere, we think about the demographics and the trends and the right fit. But it's never been the driving force. I've never said, hey, we need to be here, so let's go open up, and then the business will come. Our expansion, whether that be M&A or it be organic, has always been about the people. So what's most important to me in a new market is that we have somebody that I can work with, somebody that we can partner with that can represent the b1 way. And if you look at our expansion around Louisiana, it's the order in which we expanded was the order in which we found good local market presidents. And if you look at our expansion, even in Dallas specifically, we have 11 spots now in Dallas, and the order of the branching was never about I need to be in this place or that place. It was always about who can we partner with. I even like to bring on that potential partner early, so maybe half a year of working with b1, if possible, before we actually make the investment in the physical location. Because the physical location is really secondary in the way we think about where we want to be. So it's good people, and if you get good people, then the business will come.
Absolutely. How do you balance the risks and rewards of strategic expansion in today's economic environment?
Well, I do think we're in a good economic environment. I think the past 5-6 years in particular have been tough on us all, on America, but also on community banks and our clients. And there's been a lot of volatility. And I feel like even though the world is likely to remain volatile, I feel like we're in a little better spot in terms of being able to predict. And the number one thing you need for investment is the ability to predict whether or not you think that investment would be good. So I feel like we're in a little healthier spot, a spot in which people want to do things, and bankers need clients to want to do things, to be able to add value. So I like the current economic situation. I do feel, though, that it's not, smart thing is not to make decisions necessarily based on today's economic environment. When you're making big investments, you shouldn't be making investments for the next 5-7 months. You should be making them for the next 5, 7, 15 years. And so regardless, oftentimes I think today's environment and trying to parse it and analyze it can be somewhat overwhelming for folks, and can be almost paralysis by analysis, I think, the phrase that they use. Sometimes if you take a step back and you kind of extend your duration out, then it becomes simpler. And is this a good long-term decision that we know can survive economic cycles, survive different economic realities? And so the way that we mitigate risk or think through risk and reward is really extending out that duration. It's just something that we feel will add value for 10, 15, 20 years. And life gets a little simpler when you look at it that way.
Makes a lot of sense. So what are some of the challenges that you've encountered during your acquisitions, and how have you addressed those?
Well, every acquisition has challenges. Most likely, if there wasn't a challenge, then there wouldn't be a reason to do the deal, right? Either the bank that you're partnering with has a challenge that you can help solve, or we have a challenge that they can help solve. And that's kind of the reason that you get together as partners, is to be better together. And then the actual working through those challenges. Sometimes some challenges obviously come up after the fact. I can remember very specifically, we'll never forget the largest merger we ever did in terms of relative asset size. We announced right before COVID occurred, and then COVID occurred, and we continued with it, and that was a challenge that we overcame, but it's not one that we could predict, and it's really a good lesson in terms of dealing with challenges. The reason we were able to do that, the reason we chose to continue following through with the acquisition, was that I knew we were partnering with the right people. So when it comes to acquisitions, everyone's unique. But what needs to be consistent for me is a level of trust and comfort with the people that we're partnering with. And winners find a way to win. And if you can partner with winners, then you're probably going to be able to overcome just about anything that the environment throws at you.
I like that philosophy. How does b1BANK's expansion align with broader trends in regional banking?
Well, I think just as it's a positive time in the economy today, I think it's an exciting time just in the industry. There's there's more activity, there's more movement, there will be more transition, whether that be folks that have wanted to potentially partner up for a while but haven't been able to because of the market or the regulatory environment. Or if that be just the use of technology and exciting things that are happening. So I feel like we are well placed when it comes to positioning and ourselves and whatever opportunities might come up. I think our key is that we don't need to consolidate just for the sake of consolidation. So there will be consolidation. We've worked hard to design ourselves as a company that is equipped to participate in that. And, from a capital perspective, from a healthy balance sheet perspective, from a people perspective, from an experience-based perspective, I think we're well positioned to participate. But it doesn't have to be the way that everybody's doing it. We just need to be sure that as we navigate the transitions that are occurring over the next few years, that we remain true to our own business model and make sure that we're doing the things that we need to do to serve our clients, and we'll be able to surf the waves as they come up, as long as we keep our long-term business model intact.
So I know that b1BANK has been recognized multiple times, both locally and nationally, for its as the best places to work. How do you maintain company culture and values while growing into new regions?
That really is probably the question, when you think about what makes a successful company. And I'm proud if you line up any awards that we've received, and we even got one last week in the tech world, which I was excited to get. But when you line up all the awards that we've been able to accumulate and the achievements, the one that I'm proudest of is despite all of our growth, we've still been able to win awards around our culture. And the awards that you're referring to are ones in which our own employees have voted on those awards. And to be able to do that with a culture where you've all worked together for 30 years, I think is one thing. But to be able to do it when you've quintupled in size over 5-6 years and introduced a lot of new faces is something that I'm extremely proud of, and I think a pretty rare accomplishment. So the way I think about preserving our culture is, I think a little bit about my military days. A lot of management books, they talk about day one decisions that you make, or they talk about the first 100 days. But in the military, we always talked about day T minus. And what that means is that the day that something happens, it's almost too late. You need to think about the minus days, the days before. And so when we're thinking about acquiring somebody, or we're thinking about expanding into a new market, well before the deal transpires, or even an agreement that we need to have a deal transpire, I'm thinking about the cultural fit. That's really the first question that I ever ask. And you don't have to protect or recreate your culture if you're partnering with people that have similar cultures. And so the number one kind of litmus test for me on acquisitions or growth is, who is it that I'm partnering with? And I'm proud also that, and it's on a similar kind of vein, is that we have 4 former bank CEOs that are still working with us on a daily basis, contributing, being a part of the team. And typically, historically, when you go buy another institution, it's typically because the CEO wants to hit the road, right? He's ready to retire, she's ready to retire, and their interest is not necessarily in continuing along the path or the journey. And we've been able to actually keep 4 of our CEOs engaged, and that really speaks highly to the fact that we had a good cultural fit, and that really is the key to success. But it doesn't start with once you're actually teammates. It starts with how do you treat each other before you're teammates, early in the process, and that could be the CEO and I getting to know each other over an extended period of time. But it's also when you think about negotiating an agreement. Are you negotiating on behalf of their employees, and how they're going to fit into your entity, and how they're going to be treated early? And what I like to do is treat them as teammates from T-minus day, before they're actually teammates.
You shared some very good insights there. Thank you. How is b1BANK positioned amid the trend of consolidation in the regional banking sector?
Well, I think we're as well positioned as anybody. We have a good track record of successful acquisitions. We've done 6 whole bank acquisitions, and we've done 2 non-bank acquisitions, and they've all worked out better than I anticipated when we first signed them up. So very excited about that. And the reason is that we have a management team. We have a deep management team, top level, with my executive staff, and the second and third levels, and it's made up of folks that a diverse group of opinions and interests and backgrounds, with the exception that we all tend to be relatively young. So we've all got 20, 25 years of experience doing this, but hopefully have 20, 25 years more. And part of the consolidation movement in the banking industry is around managerial age and the age of boards. And so we've tried hard to put together a team that's going to be around. And when you think about groups wanting to partner with other groups, being with somebody that's going to be around is a pretty important feature for employees. And in a world that's volatile, offering something that has some consistency is attractive. I would also say, though, that what's equally important to me is that we've built a capability to grow organically, which means that when you think about the trends of consolidation, even as people are consolidating through acquisitions, I know that we can, but we don't have to. And the best deals are the ones that you do when you don't have to do a deal. And so we've invested heavily in making sure that we can continue to grow without doing a deal. And I think that'll end up making us a healthier participant in the broader consolidation movements.
I like that. What role does innovation play in staying competitive with larger national banks and fintech companies, and what strategies do you use to retain customers during periods of intense competition or market shifts?
Sure. Well, I think that there's probably never been a time when community banks were as prepared to compete on innovation and technology. We have a different mindset than we used to as part of it, but also one of the advantages to the way the world's developed recently on tech is that there's so many more tools available. There's been a democratization of capability because of technical developments or technological developments, and so there's really very little that a large bank can do that we can't do, or that a fintech can take on that we can't take on. So it's an exciting time in that regard. I think a couple keys. One is that when it comes to innovation, we have to remember that we're probably not going to be inventors. Right? We're probably not going to have proprietary technology. So our challenge when it comes to innovation is making sure that we use the innovations of others properly to their utmost. And really, it's not about having the tools or not having the tools. We have the tools. The key is how do you use those tools, and how do you make sure that we are mixing and mingling the tools in a way that's most productive for our employees and our clients and for ourselves. So we've invested a lot in having a staff that's every day is out there looking for opportunities, and so I feel like we'll be well equipped to kind of navigate what is an increasingly complex world. Even though there are more opportunities than there ever have been, that means that there's also more complexity and more potential confusion. And so we need to be able to kind of navigate that. And that's an answer to the second half of your question is how do we deal with shifts and as it relates to our client base. And I think that is the answer to that part of the question as well. If we can help our clients navigate an increasingly complex world, if we can help make sure, not that they know they have this these technological tools available, but actually help them choose which of them makes the most sense for them today, then I think the shifts and the transitions that are occurring could actually be a great opportunity for us.
Let's just go a little bit deeper on that. Who or what do you see as the biggest disruptor for community banks like b1BANK in the next year or so, and how are you planning for it?
Sure. Well, I see the biggest challenge that we're facing, not just B1, not just banks in general, but maybe the country, is fraud. And when I say fraud, I also mean cybersecurity issues. Right. So there's been a lot of technological advancement. We've got more coming. Certainly with AI is a great example. But what tends to happen in times of technological change is that the bad guys are a little more focused on how do I use this for bad purposes than the good guys are. And the good guys play a little bit of catch up. And so I think as a country, as an industry, we're going to face a period of time in which some of these technological tools are used for bad purposes. And so we have to be prepared and be doing what we can do to make sure that we're keeping up with that and making sure that we're also making the right technological investments to use those tools, not in necessarily just kind of sexier or more glamorous or more customer-facing ways, but in back office, how do we protect information flows and data and that's going to, two things have to happen. One is that we have to worry about it top down, so we have to make sure that we're investing in the right tools to catch things before humans even see them. We get thousands of hits every day from Central Europe trying to enter into our systems and make bad things happen. And so we have a whole team that's smart people. That's their full-time job is protecting you and me, Penny, as we just assume that banking is what it's always been, which is you got money sitting there in a vault, right? But that's not the case anymore. It's digital. And so we have to make sure that we have vault-like tools that we're using. And that's something the bank can do top down, and we're doing. But you look at issues that have occurred because of fraud or cyber, 95% of them have been a person making a decision, a person being a little bit loose or clicking on something or kind of following a chain that doesn't quite make sense, even though it sounds appealing. And that lets bad guys, bad women get in. And so part of our job as bankers is to be educators. So how do we let our clients know about the vulnerabilities that they face, and how do we help them combat it in their offices as opposed to just at the bank? And sometimes it's uncomfortable. Sometimes as a bank, we have to say, well, let's slow down a little bit. But I think it's incumbent upon us to explain why and to make sure that people understand what the processes and procedures are. Over Christmas break, and it's personal too. It's not just business, it's also personal. Over Christmas break, I had 3 different debit cards between my family members, 3 different debit cards that had fraud occurred. When that happens, you have to shut the card down, and it's very frustrating, right? But I also know enough as a banker to know that it's for the right reason, it's for the right purpose, and there's certain things that I can do to make sure that my lifestyle is not hampered by a single credit card being shut down. And those are the kind of things that we as individuals need to work on. How do we make sure we have a buffer and breathing room so that as we're combating fraud, our life isn't as disrupted as the bad guys might like it to be?
I want to step to culture, back to culture, but more about culture with customers, which is what you've kind of been talking about here too. How does b1BANK balance offering personalized services while scaling operations to compete with larger banks?
Sure. Well, this has always been our business model, and I think it always will be. I hope it always will be. But we've always made the argument that there were clients out there that needed the sophistication or the tool set or the product set that a big bank might offer, but they, in and of themselves, weren't big enough to really get on the big bank's radar to get personal treatment and to be an individual versus a number. So we felt like by our making investments in technology and our investing in growth so that we had a bigger balance sheet, we might be able to offer some of those same bigger bank or now fintech capabilities, but do so in a way that actually values individual clients, individual customers. And that means investing in people, as we've talked about before, and probably a little bit of a broken record there. But whether you're talking about expanding into new markets or you're talking about technology, what you're really talking about is having the right people on board so that when we need to have a personal interaction, we're capable of doing so. Sometimes you can kind of get out there on the technological ledge and think you can solve all problems through technology, but there are going to be times when a person needs to talk to a person. And so what we want to do as a community bank is make sure that we retain that capability and make sure that we're investing in people. And doesn't mean you can stick your head in the sand and not invest in technology. We need both, but there will be times and will be days when somebody needs to talk to somebody, and we need to make sure that we maintain that capacity.
Absolutely true. With the time we have left, I'd like to get your take on key banking sector trends for 2025 and beyond.
Well, I think, again, I think uptick in fraud is a major one that we need to be aware of. I think that's kind of inevitable. I think that we are beginning to feel as a country that we can be open for business again. And so I think you will see some uptick in lending. I think we also have regained some trust in banks. And there have been periods over the past few years when that's been tested a little bit, but there also have been periods where banks have really come through. I think about the provision of PPP after the pandemic and how many community banks were there for their clients. And we grew a significant amount based upon just being there for business when our clients needed it, which is something that not every institution was able to do. And so I think there's a little more trust and a little more belief in the importance of banking than there might have been a few years ago. And a lot of what we do business-wise is psychological. And so I think our psychology is good around that environment. It doesn't mean we don't have to keep tending it and maintaining it and making sure that we're making the right investments, because our attention span can be short as a country. But I think we're in a pretty good spot in terms of people's willingness to do things and their belief in the need for a banking relationship to help them do that. So I think 2025 will be, it won't be lights out in terms of growth. We're still, interest rates are still high. And I personally think the fact that we've kind of slowed down our lowering of rates is probably a good thing for the country as a whole. I think inflation is a bigger threat and still a threat. It's not the only threat, but it is one that we need to be aware of and need to continue to combat. So I don't think it'll be lights out, but I do think that it'll be a healthy growth. It'll be a healthy, moderate growth, and we're looking forward to participating in it.
Jude, this has been a great conversation. Thank you so much for making the time to join us today and share your insights. We appreciate it.
Sure. Well, thank you for having us. It's a great service that the Business Report provides, and we're in effect kind of working on the same things, which is supporting small businesses. I did want to mention, if you think about small business, think about the fact that 70% of all credit in America is provided by community banks. And if you think about agriculture, 80% of all credit is provided by community banks. And America would not be America without small businesses and without our agricultural sector. And as we think about 2025 and trends towards bigness, which is another way of saying consolidation, I think it's really important that we as a country and we as an industry think about ways to make sure that we preserve an aspect of our economy that's critical. It's important to us, and it's important to America, in my belief. So I appreciate your attention for community banking and for small businesses in general. Thanks, Penny.
Absolutely. Thank you, Jude. And thanks also to our viewers for tuning in, as well as our sponsors, Neighbors Federal Credit Union, the East Baton Rouge Parish Library, and Insperity for making this experience possible. Please join us again for the February 19th episode of Strictly Business. Until then, enjoy and make your day a great one.